Vincent Reinhart and a former Federal Reserve official. Vincent, what's it going to take for this Fed to move?
The Fed's going to have to be convinced there's global economic momentum. It's going to have to worry more about resource slack, and it is going to tighten sometime soon, probably by the end of the year.
So you think they'll actually do that this year? I don't know. Jim Bianco, what's the expression? Fool me once, fool me twice. I mean, they keep promising, right? They keep promising that they're going to do something, that they're going to move, and yet all kinds of problems keep sprouting up. Brexit, of course, being the most recent one, Jim.
That's right. May of 2013 is when the Fed started the taper tantrum. That was 39 months ago, and that's when we started this talk about when the Fed's going to raise rates. And in 39 months, we've gotten one rate hike. And I think we're several months away from another rate hike. I disagree with Vince a little bit. I think this Fed is being dictated to by the financial markets. The financial markets do not want a rate hike. And at the end of the day, if the financial markets don't want it, they're not going to give it to us. So I don't expect a rate hike until next year. Even at that point, maybe even not then, but at least not this year.
Does that concern you at all that they're listening to the financial markets perhaps more than they should in this particular case?
I think so. It's kind of the inmates running the asylum, and the Fed has been listening. I thought that what happened in May and June, the Fed tried to orchestrate a rate hike campaign in May and June, and the financial markets never bought into it, and then the Fed did not move rates in June. Because as tried as they could to get the financial markets to buy in, they didn't, and then they didn't move, and now they realize the financial markets are running the Fed, not the other way around.
Look, this carries, as we well know, some serious consequences with it. Vincent, the big concern, of course, is that aside from punishing savers, I mean, you're really out of luck right now if you're someone who's living on a fixed income and just trying to live off the interest you might make, say, on a bank CD or on a treasury bond. Good luck. But also, there are risks associated with leaving rates this low for this long. And isn't that in part what we're seeing play out? And doesn't that tie into the political equation where you got Bernie Sanders supporters saying, hey, this isn't fair, the rich keep on getting richer? Well, hasn't the Federal Reserve had a big hand in that, Vincent?
So there's two parts to it. One, by keeping rates low, the Federal Reserve is providing financial accommodation that supports asset prices, i.e. support and wealth. And the second is by keeping rates this low this long, the Federal Reserve is basically saying they're willing to risk an inflation overshoot. And that's what we're forecasting next year. Inflation will actually go above the Federal Reserve's goal.
That would be amazing, though. We've had like zippo inflation forever. Yeah, it would be kind of an accomplishment. Hey, look, if I'm the Fed, I would welcome a little inflation. At this point, Jim, I mean, wages going nowhere, basically no inflation in this economy. Bizarre, right? When you think about it, given all the stimulus we've seen from the Federal Reserve?
Not only the Federal Reserve, but world central banks. I agree with you that even if you were to ask anybody from 2009 forward, if you went back to 2009 and said, here's what world central banks will do for the next 7 years, you would have thought we would have had much higher inflation than we have right now. I hope Vince's target is right. I hope we get more inflation than the Federal Reserve's target of 2% next year. The problem is that the financial markets is mentioned in the statement, inflation compensation, which is the inflation-protected securities market, is pointing the other way. It's actually going down and pointing for less inflation in the future, not more.
Yikes. All right. Really unusual circumstances, unusual times we're living through right now. Jim and Vincent, good to see you both. Thank you so much. I want to turn back to